Good morning and welcome to a new month of rushing, your morning help before market opens. November brings a lot of surprises ahead. The year is almost over. Let's see what will move the markets this week. Let's dive in. First headline. AI stocks explode as big tech doubles down on spending. What does it mean? AI remains the core market engine. Nvidia's market cap hit $5 trillion, the first semiconductor firm ever to reach that milestone. While Meta announced $71 billion in total capital expenditures for 2025, nearly half directed toward AI infrastructure. Analysts estimate AI-related companies now account for 75% of S&P 500 returns this year. Why magnify it? This scale of investment cements AI as the dominant capital expenditure story of the decade. But heavy spending also raises the bar for profitability. Any earnings miss could trigger massive corrections. Possible affected sectors: semiconductors, hyperscalers, cloud and software providers, data center REITs, energy and power infrastructure, and AI service firms. Second headline. Fed cuts rates. But December remains a question mark. What does it mean? The Federal Reserve approved a 25 basis point cut, lowering rates to a 3.75 to 4% range. Two voting members dissented, citing inflation persistence. Chair Powell reiterated that another cut in December is not a foregone conclusion. Why magnify it? Markets wanted commitment, they got caution. The Fed's mixed tone keeps both bulls and bears alert. With inflation softening but employment fragile, policy visibility remains low heading into year-end. Possible affected sectors: treasuries across the curve, banks, real estate, utilities, growth equities, and the US dollar. Third headline. Bitcoin posts first October loss since 2018. What does it mean? Bitcoin fell 17% in October, from $126,000 to just over $104,000, marking its first October decline in 7 years. Roughly $19 billion in leveraged positions were liquidated, according to major exchanges. Why magnify it? Crypto's October crash underlines its growing correlation with risk assets, not its detachment. As liquidity tightens and regulations stiffen, institutional money is testing patience rather than conviction. Possible affected sectors: crypto exchanges and miners, fintech, blockchain infrastructure, and payment processors with crypto exposure. Fourth headline. Berkshire Hathaway posts record earnings. Cash hoard grows. What does it mean? Warren Buffett's Berkshire reported third-quarter operating earnings up 34% year-over-year to a record level, with its cash pile swelling to $382 billion. Despite record liquidity, the firm has avoided share buybacks for 5 straight quarters. Why magnify it? Berkshire's conservatism reflects deep caution from one of the market's sharpest capital allocators. When Buffett hoards cash, it signals limited near-term value, but also firepower for future dislocations. Possible affected sectors: financials, insurance, conglomerates, and defensive blue chips. Fifth headline. Trump tariffs shake trade, but banks return to IPO market. What does it mean? The Trump administration confirmed new tariff reviews alongside a surprising rebound in banking confidence. Central Bank Company priced its IPO at a $5.72 billion valuation, one of the largest bank listings since 2008. Why magnify it? This mix of protectionism and financial optimism reflects the odd balance of late-cycle dynamics, slowing trade, but a still active capital market for select sectors. Possible affected sectors: banking, trade and logistics, IPO advisory firms, and industrials exposed to tariffs. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with people to help them too. Links to all socials and the written brief are in the description.